Welcome to the Cash Flow Project Podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cash Flow Project Podcast. I'm your host, Steve Fierros with Tri-City Equity Group. So I'm excited. I don't always have local entrepreneurs and investors here on the show. So we're excited to have Patrick Grimes on the show. So Patrick is a founder and CEO of Passive Investing Mastery. He's an Amazon best-selling author and a Forbes Council contributor. He's a serial entrepreneur specializing in alternative investments. And we're definitely going to dive into some of that because I'll be honest with you guys, he's probably the only one that I know talking about what we're going to dive into here in this space. So his portfolio is diversified across energy, litigation finance, commercial lending and acquisitions, including retail, industrial, and thousands of apartment units. He's developed a range of diversified passive investments focused on growth and cash flow, including the diversified litigation portfolio. Doesn't that sound interesting? As acquisitions fund and income fund. So this is all designed to thrive during economic downturns. And if you guys have been investing in the last couple of years, hey, we're not in the best of shape. So he's formerly a robotics and automation engineer. He holds a BS and an MS in engineering and an MBA. So he's based here in Hawaii, here in Honolulu. He's probably maybe 15 minutes from where I am. He's dedicated now to educating investors on achieving financial independence through mastery in passive alternative investing. Patrick, welcome to the show.
Glad to be here, Steve. And I agree. It's very rare. I feel like we moved here because it was my wife's idea to Honolulu, but not because we were going to invest here, right? And those hospitality-driven markets are not my favorite.
Yeah. No. It's definitely a unique environment. We were talking a little bit off camera for those of our listeners. It's like, well, okay, so obviously where you're investing in really kind of depends on different strategies. Like one strategy may work incredibly well in a certain market and not well at all in different markets. And so don't be afraid to, we've talked about this previously on the show, but if it doesn't work in wherever your backyard is, you don't have to be stuck in investing in your own backyard. So Patrick and I are going to talk a little bit here on the show about how you can make that work with your personal investing strategy and not only do it, but do it well, to do it successfully. And so, but kind of before we dive into some of that, Patrick, give us a little bit of your background. I obviously gave your bio, but kind of give us, you're not from here and neither am I, but give us a little bit of your background. How'd you get started in the business? How'd you get to Hawaii? And how'd you get to working on what you're currently working on?
Well, so like many of your listeners, I was a high-paid professional out there. I was doing machine design, automation, and robotics out of college, and pretty much sure I was going to rule the world back then. and asked the partner owner of the company I was working for, he's titan in the high-tech space, hey, where should I invest? And I thought he was going to be like, oh, this medical startup or this gizmo gadget, this high-tech firm. Turns out he said in alternatives, go put everything you can in real estate as much as you can, as soon as you can. And that's where he said he made his wealth. And I was fascinated to hear that. So that was kind of like my aha moment. Unfortunately, the timing hit me. I lost everything in 2009 and 10. A lot of other people did too, but I made my way back into the game. And slowly I got a master's in engineering and an MBA and found myself at a high paid position again and looking for where to invest. And sure enough, breadcrumbs of the wealthy right back to real estate, but not speculative development, cash flow income producing properties, which ultimately went from single family homes to apartment buildings and then into other alts.
Gotcha. Okay. Yeah. So that's it. Like a lot of people, I always enjoy talking to people who have been around for a couple of market cycles. So you're investing back before the GFC. I started in the business before that time. So definitely rode the wave up, realized, okay, hey, this one strategy it's not the only way that you can make money. And in fact, you should be well diversified because if that strategy doesn't work, you're going to get wiped out, which a lot of us did. You did, you said you did. I know I did, got squeezed out of the market. And that's actually one of the reasons that brought me to Hawaii was kind of for a fresh start. I don't know if that's what brought you out here, but definitely our journeys are kind of similar in that way. Obviously you're here on island now. How long have you been on island?
So during COVID, my wife and I were in this cute little home in Burbank, California, where we'd originally moved there for her to ride her beach cruiser bike to Disney, where she does feature-length animated films to Disney, DreamWorks, Nickelodeon. And we had this cute spot. And then all of a sudden COVID hit. They boarded up all the walls because of the Black Lives Matter riots. So basically it was the ghost town. Fires rolled in that year. So we were quarantined and curfewed. And it became kind of a prison. So she came out one day and said, well, I was thinking maybe we moved to Hawaii. And so I pushed back originally, but it took me a couple of weeks and we landed in Lanikai. And that's where we spent our 2-week quarantine and had the best vacation I'd say of my life there. And then we were free. We were free to just roam about the island after you've done your 2-week quarantine. They really had a maid here on the island during COVID. So we spent a lot of time going back and forth to the island. We realized we were spending more than half our time here. Last year, we made it permanent. So.
Oh, okay. Awesome. So yeah, definitely a beautiful place. Yeah, crazy to see. And I'm sure a lot of you listeners, especially if you're local listeners, definitely experienced the quarantine lockdowns. And for some places, it was really beautiful here. It's a ghost town. And obviously you were in like one of the absolute best places to be on the island and one of the best, like the best beach, honestly, to me on the island and probably in the world. Lanikai, if you guys have never visited out here, Lanikai Beach is just amazing. Best sand, it's like powder. Yes, it's so beautiful. But anyways, yeah. So, but to me, that highlighted, I'm sure some of what we're going to talk about here on the show, having a diversified portfolio. COVID really highlighted for me being diversified. Not only a lot of people hear diversification, they're thinking stock portfolio, they're thinking, bonds, equities, stocks, that kind of deal. To me, that really highlighted the need for geographic diversity, right? Diversity in industry, right? And what you actually have assets into. Hawaii was incredibly locked down, right? California, I know, was too. As were a number of different states. The great thing was we had business rocketed rolling in other markets that were not locked down. They were wide open and open for business. Texas, Tennessee. We were investing also we had geographic diversity, right? Our commercial assets really did well during that time because, hey, guess what? Those places were open for business. And so that really highlighted a weakness in our local market here in Hawaii. Hey, okay. Hey, the chance that we have some crazy lockdown went up exponentially higher that we've already had that happen once. We know how the state's going to behave. Okay, great. We know, hey, I want to have investments in specific markets that are not necessarily going to behave that way. And so I know you guys you have diversification in your strategy through your different funds and kind of what you guys are investing in. Fill us in a little bit. Tell us, obviously you got a few different things going on. Kind of fill us into what you guys are investing in currently, since I know you have exposure to real estate. What are you currently investing in?
So yeah, I rode the first downturn in residential real estate. And then recently we had one in commercial and multifamily. So that disproportionately hit those apartment owners, unfortunately, for a myriad of reasons. And you're right, it does further support that diversification play. In all of our slide decks at Passive Investing Mastery, we put up the allocations of the middle class, the high income, and the wealthy by Wolf and some Tiger 21 allocation pie charts. And we say, hey, look, where the people that are succeeding, right, with generational wealth, where are they allocating? Where are they slicing up and dicing their pie of their allocations? And it turns out it's not all into the stock market. It's not all into stocks and bonds. It's not all in real estate. Real estate's like traditionally, they actually line up to be around a 25% allocation. So somebody like us, we get really excited about something. We get way over indexed in that one thing. And it's the journey of a lifetime trying to figure out how to continue to carve out new pieces to what we call non-correlated alternatives. This isn't just the word diversification. I don't like the word diversification because financial planners say you're diversified in a lot of stocks. They're diversified by buying a REIT, which is a ruse because it just rises and falls with a sentiment-driven stock market. So it's truly non-correlated, meaning the market fundamentals have to be different such that they don't ride the same economic waves. So you're going to see non-correlated alternatives would be the stock market and real estate, or real estate and oil and gas. Happens to be that gold and oil and gas are correlated, oddball, about 80% of the time. But other things like medical industry or the legal industry, well, you find something very special and unique about those. Why? Because, well, they're needed in good times and bad times. People help, just like education, CPA firms and plumbers. People need these essential services because they get sick or they need legal help or they need skilling and upskilling in bad times and in good times. And so what you find is kind of something unique away from some of the more cyclic markets, the broader, well-known, popularized real estate, stock market, oil and gas, to some of these other ones that have sort of non-correlation and resilience. They tend to just go up and to the right. So that's really where we try and strive. We try and educate for people to achieve mastery in the art of alternative investing through these non-correlated, more resilient strategies. You don't get over-indexed, man. I've done it myself a couple of times. Not fun. So it's nothing new. It's just the way that the hedge funds, sovereign funds, the more wealthy have been thinking about investments for generations. And they're just not as accessible, some of these asset classes, to the regular Joes out there. And that's what we're trying to fix.
Yeah, no, that's awesome. Yeah, I 100% agree. Hey, smart money, where does the smart money go? And I think we were talking a little bit off camera there where it's like, okay, you recently met with a family office or you spoke at a family office group. Okay, these guys, these are so hedge funds, sovereigns, family offices are dealing with a much larger amounts of capital than, let's say, the mom and pop, like just traditional investors, W-2 employees are dealing with, or maybe what you, to Patrick's point there, maybe what typical people would have access to. Hey, well, Patrick, I was looking for what you were talking about, and I asked my HR person if we have that in our 401k. They didn't know what you're talking about. Their eyes got crossed. So tell us a little bit about what you're kind of investing into, what you're offering, and what kind of on-ramp they may be for investors looking for these non-correlated assets. They're like, man, I'm tired of riding this roller coaster here. What are my options? Do I have options?
Well, you do. You may just not know about it. So in Passive Investing Mastery, we have a alternative investing mastery series. And I got to get your group on, by the way. So maybe after this, we'll do an intro. I don't think you've been on yet. So, but we're actually doing one on short-term rentals coming up. So let's talk, Steve. But every week or two, we host an alternative investing mastery series. And it's just my kind of blue ocean approach at putting, like, everybody knows about the 50 stocks out there. What are the 50 alternatives? Like, nobody knows. Very few, like less than a 0.1% of the population know about alternatives outside of the stock market and even real estate. Whereas that's where the majority of wealth can be sustained throughout the broader market volatility. And so when I started talking about the investments, and there's a couple buddies, we trade them like baseball cards. When I started showing people, hey, here's my hand, they're like, wow, it's really cool. I was like, okay, well, here's the whole deck, right? Now, every week or two, we've presented panelists of 2 or 3 people that have been doing a completely different alt, like from timberland investing. We got one on cannabis coming up. We've done them on Forex, gold mining. Of course, we've done crypto, not the biggest fan, but we've done alcohol bev investing, bourbon barrel cask investing, like just about everything that we can think of. And if we missed one, let us know. We'll get people on and do it. We've done every kind of real estate that there is in there. But we educate on these with people that are experts in these spaces. There's kind of like blue ocean approach. Okay, here's that education we should have all had. And I wish I had when I was just an engineer, putting everything into real estate. And I wish I had, I mean, I hope everybody now has the opportunity to kind of get more aware of it. And especially now with what Trump's doing with opening up some of the 401ks to alts, it's helping to build more awareness. And I'm hoping to create some more accessibility to the platform. That's our education thing. And it's my passion project. We also obviously do investments as well. We also sponsor investments as well. So we have kind of both of those extensions of the company.
Yeah, right on. That's awesome. And yeah, I love that. I love that you said that. It's like, okay, like, hey, even working as an engineer, and for some of our listeners, they're like, well, hey, I'm a W-2 employee. I'm not where I want to be. I do want to invest. But it's like, okay, well, if I can just get my master's, right? If I can just get the degree, that's just going to unlock all the doors. And you can still be an employee. It doesn't matter your level of education. You still have to go out and seek what these other, like the ultra wealthy, are investing in. And so it's like, hey, what are these alternative assets? And you don't know what you don't know. You don't even know what kind of questions to ask. So even talking about, you mentioned like the bourbon barrel investing. I looked at that a few years ago, and it's like, yeah, okay, because you have to know, hey, well, guess what? If you see those bottles of bourbon, if you're a fan of bourbon, like they can get pretty pricey. Well, that's taking up real estate that's sitting on a shelf with a barrel somewhere for the next however many years. Well, you can own a portion of that. Like there's all kinds of amazing opportunities that are out there. And the vast majority of people are like, okay, well, mom and dad told me to invest into the stock market. Mom and dad said to buy your house. So I can wrap my head around that. Right. But it's like, you don't even really know what kind of questions to ask. It's the most approachable things, sure, but is that the best for you to invest? Not necessarily. There's so many other opportunities out there. And to Patrick, what he was saying earlier, right, was, hey, I don't want necessarily things they're going to directly correlated to what's happening in real estate. I want some exposure somewhere else. That way, if my real estate portfolio goes down, I'm still good because I've got another portion of our portfolio that's non-correlated. It's going up because there's a demand for that, right? So I love that you're providing an opportunity, an on-ramp for investors to get exposure to that. And actually that you're doing the homework. So for a lot of us that are, it's like, okay, I don't have the time to go find out about that, Steve. Okay, well, no worries. You got people like Patrick. Hey, go check them out. Go check out their site. Go check out their guides and see, hey, maybe there's something there for you, right? Now, I am curious. I've never heard of the litigation funding investments. Tell me a little bit about that, because this is definitely some type of an alternative investment. I'm always curious to hear things that I've not been exposed to before. Having done a couple hundred of these episodes, you meet a lot of people. We explore a lot of different avenues, but I love new stuff, or at least stuff that I'm not familiar with, new to me. So tell us a little bit about that, because I know that's going to be an alternative investing strategy as well.
Well, yeah. So just like when you want to assess, if you want to make an allocation to an industry, which is kind of how I look at things, like legal, medical, and we have actually things we're moving on both fronts right now, as well as real estate. We got real estate stuff too, debt and equity, but you got to figure out how to solve a need. And when it comes to attorneys, it's a fairly simple industry. We're not building an airline plane where it's like this vastly complex, multi-tiered supply chain. No, attorneys are like hourly rates, court fees, filing fees. It's pretty simple, service-based industry, just like CPA firms. Both are non-correlated, resilient. But with attorneys, there tends to be this market out there for those that are taking clients on a contingency fee basis, meaning it's not pro bono, but they believe in the case enough that they're willing to put their neck out there and get their fee on contingent of winning. And I think just like any kind of business, you can invest super early on and super risky, or you can invest really later on where it's more, we're not like, you could be oil and gas, wildcatter versus producing wells. You could be an angel investor versus dividend stock. You can be all these things, but in legal funding, it's like, well, there are attorneys really gambling on these things that who knows which way they're going to go. If they can make 50x or 100x returns, or there's like cases which have gone really far along, and these guys have been working on them for maybe 5 years, and they're in the courts now, and they're in settlement discussions oftentimes, and oftentimes they say, hey, look, this attorney needs another $1 million or $2 million or $3 million in order to finish this case out. Or they're right there on the finish line and they can add maybe another 1,000 or 2 or 3 clients that were similarly harmed and increase their settlements. They just don't have the marketing expense to go get those. And it's not dissimilar from the real estate, like our debt fund. We're lending to operators in real estate that want to buy a building, or they need CapEx to improve the building, to provide housing to tenants. And then legal funding, we're lending to legal operators, attorneys that want to acquire more clients or claimants, right? To provide operating expenses for the hourly rates, to provide access to justice for those that otherwise couldn't afford it. So it's not dissimilar. It's just asset-backed lending with loan to collateral value and liens and all that, where you're providing an ultimate service, which is a good thing.
Yeah, no, that's super curious, because again, it's one of those things where it's like, okay, well, sure, attorneys and legal fees or whatever. And it's one of those things where it makes perfect sense as you explained to me, but it's one of those things you just don't think about. Like, you don't think about, oh yeah, those guys actually need some capital too. Like, they need funding too, right? And you just assume, okay, well, hey, yeah, they're good. They make a lot of money and they settle claims and whatever. It's like, yeah, but to your point, like, some of those cases do stretch out a long time. If they are if they're contingent upon whatever the settlement is, all right, they may be working a long time without getting compensated. So it's like, okay, yeah, you're able to float the money or capital or whatever for them to continue to operate. But obviously you get a portion of whatever the settlement may be. I don't know, I'm guessing that's how it's structured. But again, it's just one of those things. It's like, oh, you don't know what you don't know. So like, even just having exposure, having somebody that's, okay, hey, well, we can monetize this. Like, there's a way that you can invest in this. I love that. You mentioned medical. What are some of the ways that you're seeing, like, in the medical industry where you're able to invest or provide opportunities for investors?
Well, so there's a myriad of different, just like in real estate, it's like, well, how can you invest in real estate? Well, we can talk for like the next week and not cover all the different ways you can invest in real estate. But with the medical space, there's really 2 predominant types. There's like acquiring practices of various types, urgent care, dental, just general practice, or receivables, right? Where you have underlying payers, which are hospitals or insurance companies, and you can essentially, because one of the inherent, like, just how you have to solve a need in the legal industry to solve a need for doctors is they'll have accounts payables that are years, 1, 2, and if they're challenged, 3, 4, 5 years out. And these will be a large part of their book of accounts payables, a large part of their revenue. And they will oftentimes need to essentially cash in on that. And so they'll sell some of those accounts payables as a discount. And so there is lots of opportunity to provide a service to these doctors. Of course, you do due diligence and you research on the specific claims and you make sure that the payee is strong enough to pay. But you can help front and fund doctors, right, at the same time and produce a really great return. And so these are ways that you could create significant, what we call non-correlated recession resilient returns, because the fundamentals behind attorneys, the fundamentals behind healthcare, they're not going to rise and fall together. And they're most certainly not going to rise and fall with real estate, and most certainly not going to rise and fall with the stock market. So each time I have taken the effort to learn about and carve out a piece of my pie somewhere else, slept a little better after that.
Yeah, no, that's super interesting. And again, I start to see how you're saying it's okay, well, there's all different ways to be able to provide value. Because at the end of the day, guys, if you're an entrepreneur, if you're an investor, we get compensated for being able to provide value to the marketplace. It's just a matter of all right, well, who has the need? What kind of problem are we solving? Right. In that instance, okay, hey, to these medical practices, they have all this AP that's outstanding. Okay, well, hey, they need liquidity, just like any other business. And so this is a way for you to potentially step in and provide some funding there. And I will preface to you guys, again, none of this is financial advice. Patrick and I are not financial advisors. Go do your own due diligence. But these are super interesting potential ways to invest. And you made a mention there earlier. It's yeah, real estate. There's literally 101 different ways to make money in real estate. There's so many different ways. Everybody just thinks it's well, I just bought another house and I rent it out long term, right? That's the only way. No, there's so many different ways. And yeah, we could easily spend a long time talking about different strategies and whatnot, but we'll save that for another call. But no, that's super interesting. Now, I know that you kind of have a unique approach here too, just being able to, I feel like that's also a gifting, being able to see all of the mechanics of how all of these pieces work together. How does your background, let's say in engineering, kind of influence your overall approach to investing and kind of the mechanics and how to put all of these pieces together? Because I feel like you have a unique vantage point in terms of how the mechanics of this could even work.
Well, I've heard it both ways. For engineers tend to have a little bit of analysis paralysis. So for every engineer that succeeded, I've probably heard 50 others reaching out. How did you do it? How did you do it? Because they have a hard time pulling the trigger. I think that because I started out early doing custom machine and robotics, there was always this sense of it's never going to be perfect. Your prototype is your final solution. So get it out there and start iterating. And so I think I worked a lot of my life with cross-functional groups. I was the mechanical engineer, mechanical designer, and then I was an R&D guy, and then I was more an architect of automation cells, and then I did sort of biz dev and stuff. I did all kinds of things, but every single time was either 4 or 5 simultaneous different projects where they were the first of their kind or completely unique, and each of those groups had a diversified set of cross-functional people, from the R&Ds to the scientists to the mechanical to the electrical to the wiring guys to the programmers to the debug to then quality assurance and then regulatory compliance and validation. And you're constantly weighing all these different challenges. And there was a lot of similarities because when you're putting together any kind of investment, you've got to have a very talented set of cross-functional players that all do their piece of the puzzle. You've got to have a very clear plan, and you've got to have a financial model, which is never going to be 100%, but you can stress test it and work it to get as close as you can. And then you launch and iterate. And I think that there's something about architecting and structuring and putting together these investments which really energizes me, and it kind of feeds that. Even though I really miss being a mechanical designer, engineer guy, robotics, I loved it. But I do see some of that still showing up, to your point, in the way that I like my partner said, I'm a very process-oriented guy. And so I bring maybe a little more balance to the group. But yeah, I think that there's a lot to learn. It's also, as you come from any background, it's also going to hinder you in a lot of ways. And I see the same thing with doctors and lawyers. They're used to being the expert. They're used to having control over it. And they're not used to having to rely on major decisions from a bunch of cross-functional players. And so sometimes that can get in your way, just like how the engineers can never factor in enough safety factor to do a deal. It's same kind of stuff.
Actually, that brings up a good point now that you say that about, like, let's say the doctors and whatnot. And this is something I always recommend. Like any investors that approach me about, Steve, how do I start? What's the kind of our angle of approach here? How should I even think about this? Like, number one, know thyself. Know what it is. Know who you are, just from a personal perspective like that. Like if you're overly analytic, hey, that's understand that. Like just know that about yourself so that you can deal with that as you're presented with different opportunities, as you're analyzing deals or different strategies. And know your risk tolerance. You got to know a bunch of, I always tell investors do that. Hey, take an inventory, like both from a financial standpoint, like what am I working with? Like what kind of capital, what kind of resources do I have access to? But then also too, like a personal inventory. What's my personal timeline? Hey, do I hate my job or am I trying to navigate an exit here in the next 5 years? Those are two different things in terms of how aggressive you need to be, what your risk tolerance is, what your risk profile is. So there's a lot there to investing. But number one, like know yourself so that you have grace to give yourself when you're looking at a deal or looking at a specific investing strategy. And then also how you can best work with whoever it is that you're dealing with on the partner side or investor or whatever. So yeah, no, that's actually really helpful. And then, and two, like you're a best-selling author. Like, what got you to even writing the books? It sounds like you got a lot on your plate. I know you got a little one too. There's a lot going on. Like, what was the impetus for even writing the books?
Well, so I contributed to a number of books with a lot of really cool people. And I've written probably half dozen articles in Forbes that I'm pretty excited about. But actually, for most engineers, I don't know, something similar about them is we don't talk a lot about what we do. We just kind of do it. And so I think I had gotten into a bunch of different real estate projects. I was several years down the line and I had never even opened up about it on social media. I hadn't talked to even some of my family. I just kind of, this is what I'm doing on the side. It's not a big deal. I'm just kind of chunking away. And then I went to an event and I kind of shared a little bit what I was doing and I got some encouragement. I really got to get my story out. And I was a little bit worried. I was a little bit scared because I was still doing engineering at the time. And I was, well, I don't know. I'm an engineer, not a real estate guy. I'm an alternatives guy. I'm an engineer. And I was, well, I'm going to re-identify myself. And it was really interesting. I went through a process that I contributed in Persistence, Pivots, and Game Changers. It was a really cool book and it did do very well. And there was a bunch of fun people in there. I was excited to be a part of it. But I finally got my story out there. It was kind of a little bit liberating because I was like, oh, okay. And then after that, it turns out I've been in over 100 podcasts now. I've been on stages every month. And then I got offered a chance to contribute into some Forbes articles, which has been really neat. And now I'm writing some more. I'm doing one on litigation finance right now. And it's a slippery slope. So be careful there. Be careful there because now I've contributed into 3 books and a bunch of other stuff. But it comes down to, I've spoken to thousands of engineers or investors at this point, thousands of investors at this point. And it's interesting how everybody's in their own unique situation in life and they all have their own sense of what they want. But it's also interesting the patterns that you see and the same things that people struggle with and the mess. And what I found is that I was never able in those 20, 30-minute conversations to provide the value that I always wanted. I always wanted to just sit there for like a whole day and just kind of go through everything I know. So I started writing articles and writing stuff and doing webinars so that I could say, hey, look, you want to know about investing in your IRA, self-directing it? You want to know about asset protection? You want to know about advanced tax strategies or backdoor Roths or what? Hey, I'll tell you what, I'll give you the synopsis now, but if you go check out this Forbes article, you go check out this book, or you check out this chapter, or check out this webinar, that'll give you all the details. We'll jump back on. I'll answer any questions. And so that actually, when I started doing that, that made a huge difference for me. And I think the people out there, because I was able to convey everything that they needed to hear just asynchronously and still jump back on and help them out where I could. But I don't give investment advice. As you said.
Yeah, none of this. It's not your own legal, your own professional advice with all that kind of good stuff. No. We're just 2 guys on the internet having a conversation. So right. You guys are just listening in. So, but no, that's super cool. And yeah, no, I totally get it too, because I run into that frequently where it's like, man, you'd love to be able to spend time with somebody and just to give them so much more of your background and what they can do, but it's impossible. So it turns into from a one-to-one to one-to-many, right? That's a part of why we do the show too, because it's like, okay, well, Patrick and I can have this conversation with just the 2 of us. We can benefit from it, but doing it this way, we have the opportunity to broadcast it to thousands or millions or whatever that ends up looking like, right? Like far beyond us. So no, I think that's really key. And obviously you've got your books out there and articles and good stuff where people can go effectively pick your brain without having to grab your time, which we all know, hey, at the end of the day, this is the most precious thing we've got. We're not promised tomorrow. And so, hey, if we got a chance to leave some kind of a legacy, whether that be through this podcast or whether it be the books and the articles and all that good stuff, we're able to do it. So yeah, we can continue to provide that, which I love. Well, Patrick, this is the time of our show where we transition to something what we call our fire round. Just a little bit more rapid fire, brief Q&A. Is that something you're up for?
Well, I just did my COVID booster and my flu shot yesterday evening. So I'm just, hopefully that espresso shot just kicks in here, but go ahead.
Awesome. All right. Well, you did mention, obviously, you got your books and your articles. Do you have a favorite book recommendation other than your own for people that are looking? And it doesn't have to be real estate. It doesn't have to be investing. It can be anything. It could be mindset. It could be engineering. It could be business. It can be whatever. Do you have some go-to recommendations for people when they ask?
Yeah, I've been talking about EOS by Gino Wickman for a while now, because I kind of cycle through it every year. I kind of go back into it and I go back down into the whole. I'm beginning to read Ready, Fire, Aim right now. I just picked up this one called $1 Million Offers, and it's just kind of blowing my mind because I realize I'm actually not a fan of gurus. I think there's a ruse of the gurus, and you get over indexed in whatever it is they're teaching you on, and that's why we don't like gurus. But it's fascinating just reading and getting in the mind of the gurus. Like they're pitching $40,000, which I've fallen for in the past, coaching programs and how they structure it all. I just have the engineer in me just barely scraping the surface of this whole marketing thing. It's wild.
Yeah, it's good just to get insight. Okay. Just because again, you don't know what you don't know. And if you're not in the mind of the people who are doing it at that level or doing a different strategy, something completely different. Okay, how did you even come up with that? Right. So yeah, you're able to get some insight into it. And that's the cool thing is it's like, hey, if I can just get one gem, if I can get one takeaway, it doesn't even need to be, I don't need to do exactly what they're doing. But if I can take one gem, apply it to whatever strategy I'm implementing and make it effective, awesome. Like that was well worth the read or the listen. All right, great. Well, next question. What would you consider your superpower to be?
I've been told that, I think I mentioned it before, but I'm very process driven. And so the breaking down large, complex things like structuring investments and setting up funds and just block and tackle, man. You just make your way, you can build your processes, make your way towards the goal line. And I think it's been very successful. I think because of my ability or my just tendency to document and process orient stuff, we've outsourced a lot to VAs, which has helped us be very efficient, helped us move and be very quick and agile to adapt and adjust. And I'd say that that's probably one of them. One of the things that my partners keep mentioning.
Gotcha. Yeah. And that makes perfect sense as an engineer. You'd be able to put your mind and be very structured on that end. And that is a gift. That is a superpower because there's some of us that are just total creatives and really struggle when it comes to, like, let's say structure, organizational structure, administrative, like all of that. And all of that is needed for successful business, successful operations, right? So I always like to refer to them as like pieces of the puzzle. If you're a different piece of the puzzle, wonderful, but you need to understand that, again, know thyself, come back and surround yourself with the other pieces that are necessary in order to paint the whole picture. So yeah, it's definitely a great superpower. All right, next question. If you had a time machine, you engineered a time machine, and you could go back and visit 20-year-old Patrick, what advice would you have for him?
Okay, so back in 20-year-old, I was back in college. Man, just graduated college, or I was still in graduate. I would say, because I got really hot and heavy pretty quick. There's really two things. I'm only allowed to do one, I guess. But the thing that I struggled with early on was I just thought I could rule the world. And I just thought I could do everything myself because I was succeeding in engineering. And I thought, well, I can succeed at anything. And so I lost everything. And then the next time I bought guru programs to try and get be the expert end all in one particular kind of investment. I was single family. And so I felt the first time I lost everything because I thought I could do it all myself. And the second time I struggled. I was succeeding at single family, but I was struggling because I didn't have a work-life balance and I didn't have a diversified portfolio because I was sure I could. I just wanted to do this one kind of investment. I don't think it wasn't until I learned to partner later and leverage other people's expertise and essentially do what I was doing during my day job. I wasn't trying to be the electrical engineer. I wasn't trying to be the programmer. I was plugging in the right team members to be able to diversify, not just into one investment, while maintaining a quality of life, but into a dozen that give you a truly diversified portfolio. And if those dozens are in completely different markets with different fundamentals, you'll never be able to be the expert in all those. You just simply, you take 12 lifetimes to be the expert in all those to achieve it. So it actually requires that you learn to partner in order to drive true portfolio resilience, because you just can't do it. You can't do 12 startups at once unless you're Elon Musk. How many people are going to be able to do that? And what kind of quality of life do you have? So anyways.
Yeah, no, that's actually a really powerful lesson. And I feel like that was a big thing that I learned along the way, was like, okay, like, and this was a transition mentally from going residential to commercial. It's like residential, you can do solo, like that, because everybody kind of understands that. It's a very basic, okay, mom and dad own a house, I can own a house, right? I can rent it out. And so, but once you step into, let's say, commercial, way more capital intensive, especially like larger projects, it's a total team sport. No, I want to leverage the expertise. I want to leverage the skill sets of other people and other players around me, because we want to do it at a high level. Right. And so like stepping into that space really, really brought to the forefront for me personally, the importance of having a team and leveraging, just to your point, at leveraging other people's skill sets. So yeah, very, very valuable. Well, Patrick, I know we want to get you to healing up. And so yeah, I won't hold you any longer, but if our audience wants to reach out to you, they want to get in touch, what are the best ways for them to be able to do that?
PassiveInvestingMastery.com, PassiveInvestingMastery.com. And we have our investments at the top of the page. We have an income fund providing anywhere from like 7 to 13+% annualized, but monthly distributed income. It's really cool, depending upon what lockup you want. So it's a really great way to, we call it the recessionary income fund, take advantage of the upside of this downturn in commercial real estate, where we can lend at really high rates right now. It's a great time to lend, or it's a great time to buy at low prices. And that's why we have an acquisition fund too. We're buying things at low prices and we're killing it. Our returns are just doing fantastic, but you've got to monitor your allocations. So we also do legal. We have a legal fund, a diversified litigation portfolio, and you can invest in spread out across thousands of individual lawsuits with non-correlated returns. It's really strong. You actually get great returns in legal industry. It's not as efficient as other industries. So you get outsized returns for a bit lower risk there. Some of the reasons I like it. And we have some new stuff coming out in the medical space that we're going to be talking about pretty soon here. So love to chat with anybody. Also jump in and set up a meeting, because I have time on my calendar now that I reserve each week just to invest in others, have these conversations. We have an alternative investing mastery series with over 50 different episodes in different alts, which 2 or 3 panelists dive in, and we dig into how different investments work and the pros and cons of different kinds of asset classes, and try and really blue ocean approach and lift the veil of all the different alts out there. And we have a wealth accelerator. So if you're really interested in moving forward in asset protection and tax strategies, and if you're interested in really taking that leap forward and unveiling all those alts, then jump into our wealth accelerator program as well. Hopefully we'll be able to connect on the other side of one of those things. And I hope everybody enjoyed the episode.
Awesome. Patrick, thank you so much for hopping on with me and with our listeners. I know I appreciated it. I know they did too. And again, lots of resources out there, guys. There's really no excuse. If you've been sitting on the sidelines, it's a great time to invest, no matter what that market looks like. You just have to find the right opportunity. And that's a lot of what Patrick's been talking about here, really highlighting, hey, there are opportunities everywhere. You just got to know when to identify them, how to identify them, and how do we invest in them. So again, Patrick, thank you so much for hopping on today. I really appreciate it. We look forward to catching up with you. We'll have to maybe record a second episode and check in on your newer offerings, your newer opportunities, and kind of get your take on, hey, what's hot in the market right now? What might be a good opportunity to pivot to? But yeah, thanks so much. We'll see you on the next one. Aloha.
Aloha.
Yeah, good conversation with Patrick Grimes with Passive Invested Mastery. Definitely unique take on non-correlated alternative investing strategies. It really is a great way. Again, we talk a lot about having diversification amongst your own personal portfolio. Again, we want different strategies. We do businesses, we do multifamily commercial real estate, we do multifamily residential real estate, short-term rentals, midterm rentals. How many different ways can you monetize whatever it is that you're doing? And Patrick has obviously taken it a step above and beyond, where they're able to invest into medical practices, legal practices, which is, again, like, it's one of those things that you don't know what you don't know. And so finding a way to be able to monetize off of that, and very, very interesting. So I would highly encourage you guys to go check him out and learn a few more things. I definitely learned it quite a bit. So I'm going to dive into some of the different strategies, and you may see, him again as we maybe record a different episode. But check him out, Patrick Grimes, over at Passive Investing Mastery. Guys, if you're interested in networking with us here locally, go join our Facebook group, Honolulu Multifamily and More. You can find us at Eventbrite, Bigger Pockets. We host monthly meetups, so we'd love to connect with you, meet you in person, and put a face to the name, shake a hand, and do some more personal in-person networking. If you are finding value in the show, we'd love a like and subscribe. Make sure you're hitting the like and subscribe, and make sure that you're sharing the episode as well. We'd love to be able to get this message out to more and more people, get better, bigger guests on the show. And so the only way we can do that is with the encouragement from you guys. So if you guys are finding value, hit that like and subscribe, share the episode. That would greatly appreciate it. That's going to be it for me today, guys. We'll see you on the next episode. Go out, take some action, and catch you on the next one. Aloha.